Aloha, everyone. The same pattern repeated itself again today in the stock market, and that is extended V-shaped rally has been met with another nasty one-day sell-off. And if you look, every time this happens after a long uptrend, you normally have to at least back and fill before moving higher. Back and fill. This one we went straight back up, but here we back and fill and then down again. V straight back up, back down, had to back and fill, moving back up, and then back down, had to back and fill a little bit, back up, kind of a V shape here, now back down. So expect us to have to at least back and fill. You're going to want to see the market hopefully find support at the 50-day moving average or those November lows on the NASDAQ 100, then reverse higher immediately, hopefully on heavier volume. If we sell off again tomorrow or on Thursday on heavier volume, then the 200-day moving average becomes in play. The NASDAQ 100, as you can see, another big volume sell-off. The last time it happened, it took us a little over 1 month to go back to new highs. It would not surprise me if this happens again. Hopefully the S&P 500 and Dow Jones Industrial Average will continue to take leadership as it did today, with the bank stocks doing very well and the transportation stocks doing well. But those indexes too are a little extended, and a lot of backing and filling would go a long way to better price action. And then pulling up the Russell 2000 chart using the IWM on FinViz. Remember that last V-shaped move off the August lows? I said, another one of these terrible straight up V-shaped moves, no ebb and flow. It opens us up to just as sharp V-shaped volume pullback. That did happen in the Russell 2000. You can see the pivot point July high level acted as support, and now another V-shaped ramp, and today we have a shooting star doji candlestick bearish reversal price bar, which indicates to me that if anything, we need to at least back and fill to the pivot point area of the October breakout, possibly come down and touch the 50, 200-day moving averages, going back to my telechart right here. So I would expect us to at least, at the very, very, very least on the Russell 2000, come back and test these levels and or the 50-day moving average, ultimately the November lows. And if we break the November lows on any kind of pullback, serious pullback could be in order, or it could be a fake out and we could reverse higher. That's why a signal is a signal is a signal is a signal. I told, there's a subscriber that isn't around a lot right now, and I hope he's doing very well. Haven't heard from him since these August lows. When the market was turning off the August lows, I told him I got some pretty good chart patterns, ACLS, you know what I mean? Like a lot of these 50% sell signals you'll see are in NASDAQ names that I was going long back in August and September. I told this guy that if you don't start buying stocks now, by the time you get a follow-through day, it's going to be V-ramped up too much, that by the time you get a follow-through day, it's going to be too late. Sure enough, that happened in the market once again. And just as now is that the crowd is starting to get into this uptrend, I got a lot of people asking me about stocks lately. Here we are selling off. So we'll see what happens. It's just time for a defensive posture. You will see on the new positions page, I have a extreme amount of 50% sell signals. Not a whole lot of 100% sell signals, but they're still there. And quite a few on recent ad signals and long signals like Team, KEM, and Netflix ad signal. MYO, my speculative long, failed completely today. So there's some failures in the new long positions, which means it's time to pull them back. So no surprise, I didn't get any long signals tonight. Only flagged 3 stocks. JMEI, it's extended from the 5, 10, 20-day moving average. PDFS, extended from the 10, 20-day moving average, the 5-day moving average not inside its real body. And then MRTN, extended from its 5, 10, and 20-day moving average. Those were the only 3 stocks. The only 3 legitimate signals were all hedges. Now, you can take one of these 3, UVXY, VXX, which is half as volatile as UVXY, or TVIZ, which is a medium term VIX hedge, while the others are short-term VIX hedges. For me, a signal is a signal is a signal. I'll be putting around $12,000 in the UVXY signal, so to pay $1 commission for that, and then put like $8,000 in the VXX signal, and then put $4,000 in the TVIZ signal, I'm pretty sure that that means I can handle a $3 commission on about $24,000 worth of trades. So I'm not too worried about the $3 commissions with the $12,000 long in UVXY, the $8,000 long in VXX, and the $4,000 long in TVIZ. I believe I have the capital for full asset allocations to each position, so I will take them. So with TVIZ, since it's the one furthest off the lows, I want to get long 1% of my account capital. Limit order 11.15, the high of the day, and my one and only cut loss 10.52. It moves below this October low. I'll be out of half, and then my selling off of half of each continues until I don't have any more. VXX long high of day 32.26. My one and only cut loss level, yesterday's move below the low of day 31.04. 2% of my account capital. And then UVXY 13.68, high of the day. My one and only cut loss level, a move below yesterday's low a day of 12.68 at 12.67. In my IRA, I am not permitted via Interactive Brokers to trade UVXY, so I will have to take the TVIX hedge. Same principle applies as UVXY, going long, high of the day, 7.49 in my IRA. Cutting my final loss with a move below 694 at 693. Hit 693, I'll be halved, and then half, and then half, and half, and half. I still have some of my TVIX in my IRA, and I still have some of my UVXY in my margin account because of the halving of positions. I only have 8 shares of like TVIX, and I think with UVXY I only have something like 5 shares. Whatever it is, it's not much, but we'll be adding a lot more here, but the same principle, the 50% selling applies. I do have one speculative long position that I'm adding to. It would have been a higher quality long position, but it is no longer part of the low price perfect speculator scan because the current price is below 20, is more than 20% off the 52-week intraday high. And I think it just needs a 3 or 4% move higher, and it will be back in that low price stock scan. And if it would give another ad signal, it'll be higher quality. But with it being speculative, I don't want to post it here. It'll be just given to the platinum members only. And right now, I don't recommend long positions with the market looking like it's topping out. And don't forget, with today's down day in the NASDAQ, now I know that we were up in the Russell 2000. I know the Dow Jones Industrial Average is up. I know the SPY was barely down, but with the Nasdaq 100 and the Nasdaq down over 1.25% each, respectively, I would have thought that we would have seen a sharp increase in the IBD put-call ratio, but it fell from 0.68 to 0.66 today. Like I said, the crowd is more complacent short term than at any point that I've seen, and we just had a big crack in the market. That's my biggest clue to continue to pull it back, not to mention the umpteen thousand 50% sell signals. All right, everyone, I'll see you in the chat room on Thursday morning. Aloha.